Welcome, everyone. We're going to be chatting about Bitcoin. So one of the most exciting topics. Not a lot happens in Bitcoin, but we're going to have a lot to talk about for sure. Why don't we just start with a very quick introduction and why you fell in love with Bitcoin?
Man, why did that's like prehistoric timing. So my name is Udi. I'm a Bitcoin dinosaur. I'm also CEO and customer support intern at Taproot Wizards. I think Bitcoin was just, I used to be a software developer, whatever it was, 12 years ago. And I heard about Bitcoin. It was just, at the time, there was nothing like it. Today, there's a lot of things like it, but back then, there was nothing like it. I was just, I used to play poker online before that. And so I had good experience with having my funds confiscated and stuff like that. So when I heard about Bitcoin, I was like, oh, this is a solution to all my problems. And never played poker again ever since.
So, OGs of a certain era were doing certain things in Bitcoin.
Right.
2013, which, people were there to check out gambling and other stuff.
Right.
But no, I stumbled down the rabbit hole because I studied finance in undergrad during the 2008 financial crisis, which radicalized me. And so when I heard about Bitcoin, I was like, cool, I don't understand this, is actually exactly what I felt when I first saw it. But once I went down the rabbit hole, I'm like, this is the solution to the trust problem we have with the monetary policy of the US dollar and banking. And so for me, this was the solution we've been looking for all along to solve the problems that had happened in the 2008 financial crisis.
All right, I'm Muneeb, founder of Stacks. For me, Bitcoin, same year, same era, 2013. I was finishing my PhD in distributed systems and came across Bitcoin, and it actually solved the problem that people in my industry were trying to solve for more than 10 years, and it was very surprising. And once it clicked, it's been a rabbit hole since.
Before we kick off the discussion, we were talking kind of backstage about one question, which is, if you, the audience, look at your total crypto holdings, please raise your hand if more than 50% of your holdings is in Bitcoin.
And what if, keep your hand up or raise your hand if more than 20% is in Bitcoin. More than 20%, that's definitely less than half, right? Like much less than half.
Yeah.
If your crypto holdings is more than 10% Bitcoin, more than 10%. Yeah, okay, so look around you, that's nothing. I think that's maybe like 10% of the audience. And what I would ask, this is the smartest people in crypto basically, and the most involved people in the crypto industry basically. And maybe 10% own any Bitcoin at all, it seems like. So what I would ask what I would ask myself is, who do you think are the sellers of Bitcoin right now? Like, who's gonna sell Bitcoin? Because most of us seem to not own any. There's like these corporations like MicroStrategy, the ETFs, so they're buying up billions of dollars worth of Bitcoin every month. And I don't see anyone who can sell. So, how do you guys think it's gonna play out is something I would ask myself.
Is that investment advice?
No comment. I guess if I'm not in the US, I can make investment advice, right? I can offer people ideas.
Udi, you touch on this, but over the last couple of years, we've seen Bitcoins that have been bought by ETFs, by Treasury companies, by all these like larger entities. We've seen the holdings go to millions of Bitcoin, and it keeps going up and up and up. How do you guys view that? In terms of, is it a positive for the industry? Obviously price goes up, so it's good. But is there some concern around centralization risk, of the custodians? Does that go against some of the early premise of Bitcoin, which is everyone should hold their own? And now we have a bunch of these like large entities that end up holding a lot. We can start with Muneeb maybe.
So I'm actually extremely bullish on treasury companies, and I think the reason for that is I'm a believer in free markets, and I think they are a lot more interesting than just vanilla ETFs, because in an ETF it's just like a wrapper, Bitcoin is sitting there, but these treasury companies are public companies where the managers have a fiduciary duty to now sort of like optimize their balance sheet. And they're already seeing competition coming from Ethereum DATs, Solana DATs, and other types of assets that are coming up. And I think it's actually going to force this conversation that the Bitcoin community was avoiding for a very, very long time, and which is where is the Bitcoin on-chain economy? You know, where can I get yield on my Bitcoin? What types of methods are available? Are they in CeFi? Are they in DeFi? So it's a come to Jesus moment for the Bitcoin community because of market pressure that's going to come from these treasury companies, because it's the most efficient market that humans have ever seen, right? So I think that's in a way a very, very healthy thing. I'm personally not that concerned about the centralization risk because there are so many of these companies out there. And for an individual holder like myself, I can always keep my Bitcoin in cold storage, right? It doesn't make a difference to me who else holds Bitcoin.
Yeah, I'll chime in a little bit too. So yeah, I mean, on the centralization risk, like Bitcoin doesn't solve the problem of asset distribution. So a lot of people can kind of confuse Bitcoin as this like socialist experiment of wealth redistribution. It's not that. Like, it's going to have concentration. There's going to be institutions that hold a significant portion of it. There's going to be wealthier people who bought earlier and have a bunch of it. And so it doesn't solve that problem. That's not really a solvable problem. This is a distribution problem. And so I'm not too worried about centralization of custodial arrangements because, per Muneeb's point, anyone with, you know, a mobile phone can download an app and have a non-custodial wallet. So it means that Bitcoin, using Bitcoin as a Swiss bank account, you know, in your pocket, is accessible to pretty much anyone in the world. So it doesn't change that. So I'm not too bearish about that.
I have a much bigger concern. I think MicroStrategy owns now 2%, 2.5% of Bitcoin. And you might think, your response might be, well, this is a lot. I'm concerned because they're owning so much of Bitcoin. This might hurt the value proposition. My concern is the opposite. They're buying a lot of Bitcoin. There's not going to be any left for me to buy. They own 2 to 2.5%. They keep buying more, and people's reaction is like, oh, I'm concerned that they're going to buy more. That's your concern. If you're convinced that they're going to buy more, and I am, then what are you waiting for? Is what I would say. I mean, I'm much less concerned about this centralization risk at Coinbase than I am about the price just running away from me.
For you guys as early holders, are you still buying more with like everything that you get, or is that a lot of your early holdings are kind of what you're keeping, or is still, you know, a big part of money that
I don't own enough Bitcoin.
Okay, so constantly you buy more and more. All of you guys?
I mean, for me, I've been in the space for 13 years and I've never sold any Bitcoin. So, you know, it was 99% of my net worth until 2022. Which is kind of ridiculous. So I'm not buying more just because my concentration was ridiculous. I mean, you got to remember too, I've seen my net worth go up exponentially and drop 85% 3 times. It's not good for your mental health. It's crazy.
I've given up on my mental health many years, so.
We know, Udi.
Yeah.
Muneeb, obviously you're quite active in Bitcoin DeFi. You're building a Bitcoin layer 2. Can you talk about kind of like where this space is overall? We've seen over the last 2 years probably like hundreds of millions of dollars being raised for different sort of Bitcoin layer 2s. All of them seem relatively similar to someone that's not close to it. Can you tell the audience a little bit about, you know, how is Stacks different, but how do layer 2s in Bitcoin differentiate themselves? Because it's a little bit more difficult than, for example, on Ethereum.
Yeah, so I think the high-level thing for people who are not familiar is Bitcoin is very simple, it's very durable, but you can't program it unlike things like Ethereum or Solana that developers are sort of like more used to. But I think there's still a lot of potential in making Bitcoin productive, deploying it on chain, using it in DeFi, doing decentralized lending of it, decentralized trading of it, all the applications that people are really excited about for Ethereum or Solana, that can happen with BTC as well. And I think that part of the industry has traditionally been lagging a little bit, and I think there are 2 big reasons for it. One is actually technical. There's technically a very hard challenge, which is fully trustless way of moving your Bitcoin from L1 to L2. And recently there has been a lot of progress that has been made on it. The other is, I think, actually just awareness and building a developer community around it, because, this Ethereum and Solana in some ways are much more straightforward. You can start programming it. Bitcoin is much harder to program, and you have to bridge it first to L2 and then sort of like get into it. So there's this market awareness problem, which is what you're referring to in the last 2 years. I think we at Stacks helped contribute towards this as well, that we are raising a lot of market awareness around how large of an opportunity the Bitcoin DeFi ecosystem is. It's literally trillions of dollars that are mostly sitting passively, and they could be deployed on chain. And that's I'll link that to the point about the digital asset treasuries, because they are going to face market pressure to now go and get yield on the Bitcoin. And we are already seeing that. People are coming to Stacks and asking us about how to get yield on their BTC. So that's kind of like the historical point of view. Recently, 2 years ago or so, a lot of Bitcoin L2s got funded. They differ a little bit in the technical approaches, what they're trying to do. Stacks still remains the highest market cap, like circulating supply market cap project out there. And I think the way we sort of differentiate is, I think we have a very, very organic developer community, people who've been at it for years. They're actually seen all of the ups and downs of like, what are the challenges? And I think we have a very, very active R&D division as well, right? So there are still sort of like fundamental technical challenges that need to be solved before we can get to a place where it's fully self-custodial. You can just take your Bitcoin and, without trusting anybody, can deploy it in an L2. And I think so we recently got around $600 million of BTC deposited this year on our current version of the technology. And I think once we get the self-custodial one live, we expect that number to go into billions of dollars.
Then obviously you've been in the industry for a super long time, a bunch of the Bitcoin OGs. In my experience, at least talking to some of them, they tend to want to store a lot of their Bitcoin without really touching it, right? They tend to just want to keep it somewhere for years and years and years. And anytime they touch it, they get a little bit scared, a little bit anxious. Is that something that you experience as well with people that you know? And do you think some of those people will eventually want to go on Bitcoin DeFi and use maybe lending services to borrow against Bitcoin?
Yeah, that's a great question. And one, so my fund focuses on Bitcoin DeFi specifically. We invest in alternative L2s similar to Stacks in terms of being a Bitcoin L2. And I've known Muneeb for a super long time in this space. I think this is a question that both, I feel like Stacks, these other L2s, even at Taproot Wizards, we've wondered, well, who's the user base?
Yeah.
And I think there's this thought that there's like Bitcoin maxis who own Bitcoin, and then there's like altcoiners. But actually the overlap is pretty significant. In Asia, I think altcoins are much more popular than Bitcoin, as evidenced by the hands raised in the audience. But in the United States and like Europe, Bitcoin is held predominantly held like as a percentage of people's portfolio. So there's not that divide. So these people who own Bitcoin were also yield farming with their Ethereum. They were doing degen stuff over on Solana and Ethereum. So these are the same people. And if they have the opportunity to earn yield with their Bitcoin, I think they would take it because they look at their Bitcoin as this digital gold. But for the right risk reward ratio, I think that these opportunities would be interesting to them. So this was a conversation that I explored with quite a few folks in the space, but as a marketer, I think it's the same customer that would be using Solana or Ethereum, because there's not a lot of like Ethereum and Solana maxis. Most of those people own Bitcoin.
Yeah, I might add like 2 points to this. One thing that we have seen is the tax treatment is actually very important to some of the large holders, because let's say you got into Bitcoin in like 2012, 2013, you're sitting on these unrealized like tax triggers. And that's why when we were designing our way of depositing from L1 to L2, we had to like really double check the technology and tweak it to make sure that it doesn't trigger a tax event. And that was something that was very important to a lot of Bitcoiners. The second thing is, I'll come back to the self-custodial part and I'll share one data point, which is Babylon, which is another Bitcoin L2. They offered a mechanism where people can just like keep their Bitcoin locked up on the L1 to participate in the economy on the L2. And they got around 55,000 BTC when they were launched.
$8 billion,
which,
right?
yeah, I think it has gone down a little bit now, but I think it is still billions of dollars worth of Bitcoin. And I think that is a very good indicator that if you get the right sort of environment where the trust level is very, very minimal, like people just don't have to trust any other software, and the tax treatment is favorable to them, that's when you get the Bitcoin moving on chain.
Udi, you've been one of the central figures of Ordinals when they exploded on Bitcoin. I think it's almost, sort of like foreshadowing of what can happen in the future with some of these Bitcoin layer 2s. Can you tell the audience kind of some of the learnings that maybe you got away from that experience, Ordinals kind of exploding and then falling off a little bit? Who were those people that were using, that were playing with Ordinals and buying these assets?
So at Taproot Wizards, the main thing we are trying to do with everything that we do is to get people who are currently underexposed to Bitcoin and get them into Bitcoin. People who are crypto native, who are active in crypto, and get them over to Bitcoin. That was the main audience, kind of the main user base that we had with Ordinals. Even then, what we found is, we issued a couple of the collections on Ordinals. They, commercially they did pretty well. But it was a real challenge to convince people to spend Bitcoin. People preferred to spend other things, right? So we had, in our mints, we had people prefer to pay with Sol and get a Bitcoin Ordinal. People just don't want to spend the Bitcoin they have, or they don't have a Bitcoin. So I actually think people are severely underexposed to Bitcoin in crypto. And that's what we found, and we were a little surprised. But I actually think that there aren't as many people who are in Bitcoin. And there's we were talking about the kind of DeFi capabilities of Bitcoin, and it's really interesting. I think the previous panel, or maybe the one before that, was about DATs, or partially about DATs in crypto. There's this really interesting difference between the ones on Bitcoin and the ones in the rest of crypto. So one big difference is the kind of altcoin DATs tend to buy at least some of the coins from the foundations and the labs and so on. Like it's actually coins that aren't circulating, and they're just kind of changing hands. And that we saw the Ethereum Foundation doing that, and obviously on the much smaller chains too. With Bitcoin, there's no foundation to buy. You have to buy it on the market. The other thing is, on Solana, on Ethereum, and on those other guys, you can be, like Muneeb talked about, you can go and be productive with those assets on chain. With Bitcoin, I think it'll happen, but it's still not there. So what tends to happen, those coins just go completely off the market.
Yeah.
And what we're seeing in Bitcoin is there's more and more coins that are just going forever off the market, basically, which is a dynamic that never happened in Bitcoin before. I think that's something that people just don't comprehend. There's this new sink, which is huge, this black hole of Bitcoin, that Bitcoins go into it and they cannot go out. Well, I mean, they could, but I think it's very unlikely that MicroStrategy sells any Bitcoin anytime soon. Yeah. Things can go wrong sometime in the future. I don't think it happens anytime soon. And that's just a completely new dynamic. We had, in many time periods in the past, we had so-called forced sellers of Bitcoin, people who have to sell because they're leveraged and whatever. This is the first time in Bitcoin's history that we have forced buyers. Michael Saylor and his company have to buy Bitcoin all the time, or the company does not have a right to exist. They have to keep finding new ways to raise capital, and that's what they do. They keep finding new innovative ways to raise capital to buy Bitcoin. They are forced buyers. That's something we never had in Bitcoin before. So to me, that's like, I've been in Bitcoin for 12 years, and I have never been more bullish than I am today. It's just, I think the market structure changed completely in Bitcoin.
I've got a good addition to this, which is actually the aha moment that I had as to why DeFi on Bitcoin was important. A lot of people ask, well, why DeFi on Bitcoin? Like, who cares? Like, Bitcoin's this digital gold, and you can do the DeFi stuff elsewhere. I was at NFT NYC in 2022, and I was talking to an artist, and they're like, yeah, so I bought this NFT for 0.1 ETH, and I flipped it for 0.3. And I was like, cool, well, what do you like about Ethereum? Proof of stake versus proof of work, like Vitalik. And they're like, I don't know what any of those words mean. And I was like, holy shit, like, this person doesn't know anything about Ethereum, but they were already thinking in the Ethereum standard. They're quoting me asset prices in ETH. So that was kind of an aha moment where, Bitcoin's primary user acquisition loop is number go up. Price goes up, we all become aware of it. That's why we're in this room. And then more people buy in anticipation of it going higher. So with NFTs or other DeFi things, these are more casino games or speculative game mechanics that appeal to different people. Some people like to buy Bitcoin spot. Some people are artists and they like to buy a collectible. For example, I'm into watches, so I like collectibles too. It attracts a certain type of person. And so when we think about the Ethereum DeFi summer, it was the explosion of speculative games that brought all those new users into ETH. And now think about ETH as their money. And so does it really matter that Bitcoin is objectively a better money than ETH? No, if everyone just buys ETH because they're getting into it because of these speculative games. So that's where I felt it was important that we bring these games back to Bitcoin and have that as an extra viral loop mechanic to bring more and more users into Bitcoin. And of course, a lot of DeFi is functional in a way that's good for people. Like you borrow dollars using your Bitcoin as collateral or earn yield on your Bitcoin. So that's an aside to kind of Udi's point of like he views Ordinals as a way to pull people into Bitcoin. I saw that at NFT NYC.
Part of Bitcoin's magic has always been that it doesn't change much, right? It always stays the same. There's certain certainty that it will stay roughly the same, whereas like Ethereum, Solana, they change quickly and they can introduce some risk. But also in Bitcoin, especially when it comes to layer 2s and utilization of DeFi, it's sort of an obstacle, right? That it doesn't change. Because sometimes you need maybe a small change that would enable something to work a little bit better. An example would be some Bitcoin covenants. Muneeb, how have you kind of dealt with that, given that Bitcoin has basically been the same for the last 4 years or so? Probably will be the same for next 2 years with no changes, or at least for a few years. Is that a problem for you guys when building on top of Bitcoin?
Yeah, so I think the Stacks project started in like 2017, around the same time with Lightning started, and we had one sort of like a design principle that we're not going to rely on any changes coming from Bitcoin, right? Because they are unpredictable, they take a very, very long time. So we will always like tweak our L2 technology, and that's something in our control that we can work with. And it might have trade-offs, right? Like for example, our current version of the bridge between L1 and L2, it has a decentralized group of signers, but people have to put some trust in those signers, and that's how we are moving things. Right. If Bitcoin changes and has some more improvements that we can work with, that would help our lives, but we can't really rely on it, right? So that's sort of like been the design principle. And like I feel like when Dan was talking about people thinking of ETH as money, like there's a very interesting dynamic that always plays out in every cycle, which is whenever Ethereum is getting a lot of traction, Ethereum has nowhere else to go but become number one. Right, it's already number 2. It has been number 2 for a very long time. So if you go to the Ethereum community, at one point they had these this flipping charts, right? Like, hey, Ethereum is going to flip Bitcoin in all these different ways. It's like transaction count or gas fees and all these different like number of users. And it was very interesting that if you would dust it up and look at the chart, like even a year ago, Bitcoin was actually beating Ethereum on all of those things. But recently, because of these treasury companies, Ethereum is having a comeback, at least in price, right? And as soon as it's having a comeback over there, you see the same arguments come back up. Now in the treasury companies market, that ETH is a better asset because it has yield. ETH is a better asset because all the stable coins are on Ethereum. Like it is where all the next generation financial rails are going to be built. And then the same argument, like it just trickles down. And now you have Solana. It's better, cheaper, faster. And the things you can do on Ethereum, you can actually do it better on Solana. And I think this thing continues, and the market is not going to stabilize until like clear winners start to emerge in different categories. And when things are unstable like this, if Bitcoin, I don't personally believe that Bitcoin would ever lose the number 1 spot. If it ever does, that's actually a more unstable market dynamic. Because if somebody else can take over Bitcoin, then what else is there that's going to take over that thing, right? And large institutions and big players, they don't like to enter unstable markets. They sort of like stay away for a while until the markets have stabilized, and then they come in and build long-lasting things. So in my view, it's actually very important for Bitcoin to stand out and give something that is stable to the rest of the industry, so that people can specialize in their own different areas, but no one is trying to come for the use case that actually Bitcoin is providing.
Woody, you've been a big proponent of opcats, one of the covenants that would make Bitcoin much more usable for layer 2s. How has the process been trying to get that, into Bitcoin? Has it been challenging? How does it work even to propose something like that and to get it in the code?
It's been very hard. There's for people who are not familiar with how kind of Bitcoin governance, quote unquote, works, it doesn't, and there isn't, right? So like there's no one you can really kind of lobby and pitch. There's no one that you ask for permission. That makes things difficult, right? Because there's no one who can make the call. It is challenging, and if you're the type of kind of person who's a builder and you want to build a bunch of like cool innovative stuff, it can be seen as frustrating. But there are benefits to it too. I mean, the fact that Bitcoin is that predictable is, I think, what allows it to be the hyper financialized instrument that it's becoming now. So there's benefits and there's drawbacks. I think that what we're gonna see, we're already seeing it, and I think we're gonna see more and more of it. Is builders are gonna route around that, right? So like there's a whole spectrum that can be completely centralized, which, by the way, now with more regulatory clarity, that might be fine for a lot of use cases. And there's going to be like a lot of more decentralized solutions. And even if it doesn't happen with like changes to Bitcoin itself, the market finds a way. So I'm not worried about that. At the end of the day, you can't argue with the market. The market seems to like where this is going,
And does that mean the higher the price goes, the less likely it is that new things actually happen on Bitcoin?
I think so. Yeah, because it's hard to convince people to make a change when everything is going great, right? So we might have to wait until things stabilize price-wise before there are big technical changes, and that might take a while. I don't know that Bitcoin price stabilizes anytime soon. So.
Yeah, I mean, my 2 cents on this, it's a blessing and a curse, right? It's a blessing because Bitcoin is trustworthy, because changes are hard to make, which is great because things like the monetary policy, 21 million hard cap, we don't have to worry about that changing. Versus Ethereum, they're constantly changing the monetary policy, which, by the way, is hilarious when they talk about deflation. When the Ethereum community talks about, it's a better sound money, they completely don't grok or understand what sound money is about. It's about having a predictable monetary policy. Who cares if the dollar is deflationary at times? It doesn't make it sound money. And so instead of a bunch of guys in suits in a room, you've got a bunch of developers making changes to the monetary policy. That's fiat. Fiat is where a group of people can arbitrarily change the monetary policy at a whim. So, that's kind of the difference there. But a curse, though, is that Bitcoin can't move as quickly as all these other chains, where if they adopt new code or really cool technologies, we can't do that very rapidly. And I think I'm on the side of pushing these changes forward, because there's a social contract that was made during the block size wars. We weren't going to have Bitcoin scale on the base layer. We weren't going to increase the block size and keep increasing it over and over and over. We were going to have Bitcoin scale in layers. So Bitcoin L2s, though, have an uncomfortable game theoretic connection to the Bitcoin base layer in a way that we wish was stronger. And things like OPCat or other software proposals could, I think, fulfill that kind of social promise that was made, that we would scale Bitcoin in layers to where people using a Bitcoin layer 2 wouldn't have to use a Bitcoin layer 2 that is inherently more risky. They'd be able to use Bitcoin on a layer 2 in an almost minimized manner, almost like trustless manner. So yeah, for me, this is these changes basically fulfill that social contract that was made many years ago.
We were talking about this before, but we've seen over the last like eight years or something, Bitcoin has accomplished basically everything that you could kind of hope for 8 years ago, right? Like now it's countries that are thinking about getting exposure to Bitcoin, central banks. We have tens of companies buying Bitcoin. I will put you guys on a spot and ask you, as huge Bitcoin bulls, obviously, what is one thing in Bitcoin that concerns you today? What's one thing where, like, if you could think of, like, I'm scared of this happening in the future, whether it's like the quantum threat or the security budget or something, what is one thing that keeps you a little bit uncertain still, despite all the success over the last 10 years? We can start with whoever's ready. Yeah,
Again, I'm ready because it actually keeps me up at night, right? So I think there are two basic things with Bitcoin, which are a real threat in my view. One is the quantum threat, which I'm actually less scared about that one, and I'll explain why. So the reason for that is whoever cracks quantum computing first is likely going to be a very, very sophisticated actor. It's not that there's someone sitting in a basement and suddenly invents a quantum computer, right? Like it's likely going to be a very large research lab, like a Google or a Microsoft. Yeah. And I think they have done significant R&D in it. And if they're able to, get access to a million or more Bitcoin, that's almost like a prize. It's like a big bounty, and they're not just going to dump it on the market. Google is sitting on hundreds of billions of cash in their bank account. They don't need to sell Bitcoin on spot. Like they're sophisticated players, and they would know what to do with it. But it is a challenge just because of logistical issues. Like even if people start migrating from the addresses that are that where quantum computers can be able to steal, it will take something like 2.5 years at current bandwidth to be able to do that, right? So people need to start looking into this now. So I think it's a reasonable thing to worry about today. The second problem I'm actually much more worried about, and which is the block rewards. Right now, Bitcoin mostly runs on block rewards, and we have anywhere between like 3 to 8 to 7 years runway. It's not a lot of time actually, right? So we're going to have another halving in 2028 and then 2032. And after 2032, the new amount of Bitcoin, even if you project Bitcoin in millions, it's not going to be a lot of new supply that's actually coming in to be able to sustain the network. And when I have this discussion with a lot of Bitcoiners, I've even seen arguments like, large entities like MicroStrategy or a Coinbase, they might start doing mining at a cost.
Yeah.
It may happen, but that's not something I'm willing to bank on, that a bunch of centralized entities who just hold a lot of Bitcoin, they are now mining at a cost just to keep the network going, right? So I would much rather see a on-chain Bitcoin economy, which is what Ordinals was pushing forward, which is what a lot of L2s are trying to do, where there is, if you look at the numbers, I think there's around 1.8% of Solana's yields are coming from real economic activity. And for Ethereum, it's around 0.4 or 0.5%. Those numbers are significant. I think if we can have something like that happening on Bitcoin in the next 4 to 8 years, that would be amazing for the long-term incentives for miners.
Yeah, I mean, these are the classic problems. I mean, quantum, I'll just give a quick TLDR on both of these. Quantum, low likelihood within a decade, but we should plan for the possibility that it can occur. So we have, for example, like post-quantum cryptography, I believe is much more intensive from a data perspective. So we'd have to make changes. So I think it's something we should talk about and start planning over years and just have it kind of ready off the shelf. Versus I don't think it's a huge concern. I mean, remember that quantum cryptography, breaking any crypto, cryptography at all, is theoretical. This is theoretical based on physics. This isn't it's inevitable, it's going to happen. It may not ever be able to happen. On the block subsidy, the declining block subsidy, will it be offset by an increase in transaction fees? So basically, the newly minted Bitcoin are on this curve. It eventually hits 21 million by the year 2100 and something. And so every 4 years, the number of newly issued Bitcoins drops in half, called the halving. We all know that. Now, when Satoshi created Bitcoin, he hypothesized that transaction fees would replace the subsidy to some degree over time. Therefore, giving an amount of value to miners to keep them game theoretically aligned and behaving properly. That's how Bitcoin's proof of work works. I think it's too soon to say if this is going to be an issue or not, but of course I like to see more transaction fees occur. The Bitcoin block space is quite empty right now, so Bitcoin DeFi stimulates that. A lot of people are lending and borrowing and staking, and so that activity would make me feel more comfortable with the long-term security budget issue. My premise though with the security budget problem though is that what's an appropriate level of security spend? No one knows. No one has any idea of like, should the Bitcoin blockchain, should, you know, the miners' annualized fee revenue, should that be 100 billion? Should it be 10 billion? Is it a percentage of the total value of Bitcoin? Is there some magical percent? Is it a percentage of flows? Or is it a static number? Is it a game theoretic number that like, okay, if it's $500 billion a year, that's too much for any one government to spend to want to try to attack Bitcoin, because at that level, only nation states would be able to attack it. So I think that's the important question. What's an appropriate level of security spend? And we haven't really seen, well, no one really knows, you know, and so I think it's kind of subjective as to if there is a problem there or not.
Yeah, my biggest concern about Bitcoin is that I will not own enough Bitcoin. I think, you know, if we're talking about things like quantum threat, block subsidy, those are things that if they become a problem, maybe, then that will be, you know, 10, 20 years from now. The real problem for the next 3 months is that I think Bitcoin price is going to run away from all of us in this room. And that's the main thing that I think everyone should focus on in the immediate term. 20 years from now, we can, you know, we'll figure it out. I was sitting in this chair less than 24 hours at this exact chair. The panel was a lot more diverse. Now we're all like Bitcoin bulls, but it was, you know, there was an Ethereum guy and a Solana guy and an AI guy. And I was just sitting there and I'm like, I think like Bitcoin is going to go like hyperbolic, like immediately. And we're now like, I mean, I don't know, 6-7% higher than the price was at that panel. I think we're going to have in the next 3 months, multiple, you know, $10,000 green candles on Bitcoin. I think it's going to become like a normal thing, because basically I think that people sold all their Bitcoin. If you want to be afraid about something about Bitcoin, is you don't own enough. And I think this is correct for everyone in this room and on this stage probably. That's my main concern.
I mean, people forget too that there's only 21 million.
Yep.
That's less than every millionaire in the United States could not own one Bitcoin if they wanted to. So for any reason at all, this speculative fervor kicks in, which it's happened 3 other times in 2013, 2017, and 2021. If indeed this is another cycle, which I think it's the beginning of one, then yeah, I mean, this is the right time. You know, Bitcoin moves in ways where it might be boring for a long time and then it moves in a second. Remember that there is no supply response. When Bitcoin goes up in value, no more printed Bitcoin enter the system. This is very unlike any other asset out there. It's unlike gold, because the more valuable gold gets, they dig deeper and deeper into the earth to extract more. The same with other commodities and same with fiat currency. This inelasticity is what makes Bitcoin, I think, really unique and causes it to be highly volatile. So, and I think, to Udi's point, I think that volatility is going to be to the upside.
To play devil's advocate, Udi, like that's over the last 3 months, the amount of money that they raise has gone down. The multiples have gone down. Strategy is having issues raising a lot more capital, right? Their buys have been smaller than they have been previously. And other companies have similar issues where there's just less money to put into them. You know, insurance companies are buying less. Where do you think the next buy pressure is coming from? Like, is it people here? Is it central banks? Or do you think there's a lot more capital that just hasn't been deployed last couple of months?
So, you know, eventually I think that stuff like central banks, nation states is finally getting close to being a reality. I think, you know, people talked about it for over a decade and it was mostly science fiction. And I think we're getting to a point where, not today, but, you know, in a year, 2, 3 from now, I think it becomes a very real, you know, option. But in the immediate term, I think that people are vastly underestimating Michael Saylor's capital raising ability. The guy acquired an insane amount of Bitcoin, raised tens of billions of dollars already. Every time that, you know, they kind of pump the brakes a little bit for a month or two, everyone is like, oh, it's over. It's not over. They keep coming up with new schemes. They have a brand new scheme right now that's doing really well with Stretch. And if that doesn't work, they'll have many more. I think that the thing that people don't fully understand, unlike, you know, the other DATs, comparing the other DATs to MicroStrategy is, in my opinion, a complete misunderstanding, because MicroStrategy has to, like, absolutely has to keep coming up with ways or the company dies. Now, do you really think that Michael Saylor is going to give up now? I don't think so. One day, Michael Saylor will be like, I'm tapped out. That day will come, but it is not this day. So I just think, you know, whatever, like, oh, there's a few weeks when they raise less capital. Like, I'm not worried about that, not at all.
I think the treasury companies, I actually think they're just getting started, right? Like, it really, before it was one player, which was MicroStrategy, and
Bitcoin once, or you mean everything?
Everything. All the entire market is basically, think of this as the crypto markets are still relatively very small compared to NASDAQ and NYSE. So this is, for the first time, these new types of assets are actually find the tooling, right? They find the wrapper on how to now enter the Wall Street. And one example I would give is Tom Lee. I think he was here yesterday. Tom Lee's BNMR has gone to $10 billion in holdings in like 5 months. Right, the graph goes like this. So I don't think there's only one sailor. I think there are a bunch of like mini sailors coming up, and that's the free markets at play. Because what's going to happen is Saylor pioneered the concept and deserves a lot of credit for it. But now people are going to iterate on every single thing that they can iterate on, right? So they have yielding strategies. They have different ways of like figuring out different revenue sources and how I can go and purchase more of these assets. So people are going to try all of those things, and some of those are not going to perform, right? So there are already some Bitcoin treasury companies that are trading below NAV, which are actually great acquisition targets. Like, you can, if somebody purchases that company, that's 20% discounted Bitcoin, and there's no way to get discounted Bitcoin anywhere. So if your company is successful in its strategy, and you can just go and buy this $500 million DAT that's trading at 20% discount, you can suddenly increase shareholder value for yourself. And I think all of that is going to play out rapidly. And I think Wall Street has a very deep appetite for these new types of financial products out there.
I would say part of the reason why Bitcoin has done so well over the last year or so is also the administration, right? The administration has been very friendly. We have Trump here at the conference, his son. Are you guys, well, how much of that do you think has contributed to Bitcoin price going up? And do you think there is some sort of a small risk that if the administration changes in 3 years, you know, it's going to have an adverse effect, because this administration has been so friendly on regulations, on just pushing crypto forward in some not so good ways as well. Is that a concern that in 3 years we have to think about that, like, shit, like if Democrats win, you know, we're in a bit of a shithole?
Yeah, I actually, you know, going back to what our concerns for Bitcoin would be, I would say a minor concern. Like, I wish it was more bipartisan. I don't know if anyone knows the Reserve One folks, but like Jamie and Sebastian over there have been kind of hitting that bell of, you know, Bitcoin should be a neutral, nonpartisan issue.
Yep.
And I agree with them on that, where I'm like, I prefer it not to be a political thing. Yeah. However, we can't really plan this out how we like. It just kind of happens. I think, you know, I wish Trump and his sons would have a little more finesse with value extraction from the space. I feel like they've kind of gone really explicitly for it. And I think that's going to reflect very negatively, and Democrats could use that against the space. However, I mean, I remember, you know, when people were considering voting, you know, Trump or Biden, Kamala, but the Democrats basically said, we are going to destroy your community and we do not care about crypto at all, and we're going to do everything we can to make your lives miserable. So the Democrats somewhat forced the community to go Republican. Long story short, I do think it's a material issue.
I think that a change, and assuming that Democrats remain like they were in the last administration, I think that change would adversely affect a lot of the other projects. Like, for example, Tether is now thinking of coming to the US. That wouldn't happen, right? A lot of the other custodians and exchanges and other types of businesses in the industry, I think they would probably suffer a lot more relative to Bitcoin, where Bitcoin is already global enough and neutral enough. If anything, when things look like very sort of like shaky in the world, some people do go to Bitcoin as this neutral asset that they need to hold if there's a collapse.
Cool. Well, we've run towards the end of the talk. Thank you so much for listening. Thank you so much for the panelists. We'll see you next time.